Well, welcome everybody to our March 2013 Park City Market Talk webinar. I'm Jeremy Wilstein, the young guy.
And I'm Ed Knapp, the old guy.
And we're broadcasting live from our studio in Sun Peak here in Park City, Utah. And we're here to share with you what's been happening in the world of Park City real estate. If you follow us, we do our monthly webinars on a host of different topics.
And welcome everybody, and spring is here in the Rockies.
Yes.
So come on out and ski. We still have some great bluebird days coming up.
Yeah. So we put our contact information on the screen, and as always, you can access our past webinars with that link below. So we're just going to jump right into the topics tonight, and we're going to go over them. Our first topic, we're going to do a look back on Park City real estate market over the last 12 months.
And then the next thing we want to talk about is we were named number 4 on Barron's top 20 list again. 2010 was the first time, and we want to share that information with you.
And then there's a few proposed improvements around Park City that we also want to share with you.
And we also want to introduce our new website, BuyParkCity.com. We think it's absolutely dynamic and the best of the city, and we're going to share that information with you also.
And then finally, we're going to take a look back, 12 years of sales data, different indicators, so we can see where we're sitting after we had a boom and bust market this in 2000s.
Very powerful information. We hope you'll stay tuned for that.
Yeah, it'd be great. All right, well, let's just jump right into it. Well, first, let's remind you, you can always go back and watch past webinars at thewilsteinteam.com/webinars.php.
There's some really good information in those webinars.
All right, so Park City real estate sales. So there were 1,240 sales in Park City over the past 12 months. So that's homes, condos, and vacant land, and that's up to the end of February.
And that's up 17%, or 181 sales, a very positive indicator.
So looking closer at the data, this is our comparison of closed sales between March 2012 to February 2013, and then we compare it against the same time period a year before. Home sales were up from 443 sales to 524 sales, which is an 18% increase.
Really good news. Condos went from 474 to 548, up 16%.
And finally, lots moved from 142 sales up to 168, which is up 18%. So we're sitting right about 18% increase number of sales.
These are really great numbers.
And then we're going to look a little more specifically at home sales, and we're going to compare them to the Park City city limits and then also out in the Snyderville Basin of the county. So inside the city limits, we were again up about 20% from 147 sales to 176 sales.
And the Snyderville Basin participated too, with 296 sales previously up to 348, a solid 18% increase.
And then looking at condo sales, we also had a great increase. Inside the Park City limits, we went from 265 sales up to 336. That's a great 27% improvement.
Right. And condos, remember, always lag homes. And so we had 209 to 212, up about 1%. But actually, the first quarter here, we're seeing that number is, we're going to be reporting to you soon. That's increased. And
then finally, lot sales. Inside the Park City limits, we jumped huge. We jumped from 22 sales up to 51 sales, 132% increase.
In the Snyderville Basin, it was actually down 3% from 120 to 117. But keep in mind, higher priced lots are gone. And then second of all, we're seeing developers pick up that lower end property for development and resale. We think it's an extremely healthy environment out there.
And it's great to see the lot sales pick up because they were stagnant for so long. And then we're going to compare the home median sold price between that same time period. So inside the Park City city limits, we went from 970,000 up to 1,090,000, which was a 12% increase.
And if we look at the Snyderville Basin, we went from 668,750 to 640, down about 4%. But again, our feeling is this is infilling as we develop a base, and lower priced homes in Park City are becoming very rare indeed.
Very rare. Anything under 500,000 is nearly
if it's priced well, it's going to be getting a lot of activity. Absolutely.
So then the condo median sold prices inside the Park City limits, it was down 6% from 514,000 to 485,000.
And in the Snyderville Basin, again, we're seeing an almost flat market where it went from 264.9 to 268,500, up 1%. But again, that does not reflect what's actually going on out there in the trenches. That market is getting very, very active.
Yeah. And then finally, lot median sold prices. So inside the Park City limits, we jumped from 425,000 up to 502,500, an 18% increase.
And in the Snyderville Basin, from 185,000 to 225,000, up 22%. Again, builders are getting very selective, and inventory is definitely decreasing, so we're seeing the price go up.
Mm-hmm. All right, so that was our update on sales and units sold, and then we're gonna jump right into Barron's actually ranked Park City. They did a top 20 America's best retreats, and they ranked Park City number 4 on that.
They like the low property taxes here.
Yep. Low property taxes. Property taxes are approximately 1% of the value of your property, and again, if it's your primary residence, you get a 45% decrease in that. We don't have a lot of time to share more information, but if you see on the page, I've included a tiny URL. If you go type that into your web browser, you can read more about the article.
And when you're reading it, please include in your own mind 2 things. We have accessibility with the Salt Lake Airport, which we think is the best, easiest major city airport in the country to get in and out of. And number 2, Park City has affordability. When you're looking at the Barron's article, please compare us to Incline Village, Squaw Valley, Vail, Colorado, and you'll see why we're so excited about this Park City real estate market. We have the mountains, we have the skiing, we have the bike trails, and we have affordability for people that want to get into our market.
Yeah. So next topic we're going to jump into is these. There's a few Park City proposed improvements we just want to share with you. These are proposed. They're not being put up right away, or some are going to get started. But we just want to keep you updated on what's been going on in Park City.
And kudos to our Park City leaders who are not resting on their laurels. And they're continuing to try to always improve the Park City experience. And we think they're doing a darn good job. Let's talk about some of these things.
So the first one, this is very exciting. They are proposing to put a gondola from the top of Main Street up to Silver Lake Village in Deer Valley.
We're going to talk about that in depth in a second. Additionally, we have a $15 million Old Town redevelopment that's going in. We're going to share some specific information on that.
Finally, we're going to touch on the SkiLink. This is a gondola that's proposed from the Canyons Resort over to Solitude. We'll show you where it runs. We won't get too much into pros and cons, but a couple details.
And we'll let you know where you can get more information about that too.
All right, so first off, we're going to talk about the proposed Main Street to Deer Valley gondola site. They are looking at potentially putting this at the Brew Pub parking lot, which is, if you're familiar with Park City, if you drive almost to the very top of Main Street, on the left-hand side, there's a parking lot just up from the Brew Pub, and that is a proposed site for the Silver Lake gondola. I've also included the tiny URL for you to check out. Just type that into your URL if you want to get more.
Wouldn't this be exciting? Who hasn't stayed at the Wasatch Brew Pub in an afternoon after riding, been out on the patio and looked up at the hills and just enjoyed the day? Well, now there's going to be a gondola probably that's going to go in somewhere around 2014 to 2015.
Yeah, that's what they said.
The proposal, if it all goes through, extremely exciting. Will be the only city in the United States that has two skis.
Well, you can access. So if they put it in, you can access Deer Valley from Main Street, and you can access Park City Mountain Resort via the town.
Very, very big for people in Park City.
And then the historic Park City improvement plan has been put into effect. This is $15 million of improvements down Old Town Main Street, or around the whole Old Town area of Park City over the next 10 years. And they're starting off the project here coming up in April 2013 with some work around the Egyptian Theater. And this is funded by, there was an approval of a 0.5% tax increase on Park City Resorts. So that's what's funding
the
this
consulting
project.
Company did the City Creek development and a lot of other Utah developments. So we're very pleased, and there's information on that link. We're very pleased, though, that it's a Utah-centric company that understands our specific needs up here.
And then our final one is the SkiLink, which a lot of you have probably heard about. If you see from this map, you can see the proposed site of the gondola that would connect Canyons Resort over to Solitude Resort. Again, there's pros and cons on each side. there was just a council meeting or a public forum, and that's what this URL at the bottom will give you more details about. And that's kind of going to go into the real estate.
Yeah, but more importantly, the SkiLink is emblematic of what Talisker's big muscle, financial muscle, is doing to the Canyons area. We think there's a value proposition going on. Whether you want to buy resale units from as low as 150,000 or even less, all the way up to $400,000 or $500,000 for used inventory, and new inventory $1 million and above. So we think there's properties for everybody, and what they're doing with Canyons Resort now with Talisker, we think, is a value proposition. Contact us. We can give you additional information on why we think so. This is an area that you and your family would love to use with a 12-month-a-year use proposition, including everything from the farmers market to all the concerts at Canyons. Contact us and we'll give you some additional information why we think this is so big.
So we talked a little bit about SkiLink, but Talisker is doing a great job with Canyons. They're putting in a golf course, they're doing some development. You know, we'll see what happens with SkiLink. Let's leave it at that. How does that sound? So we want to remind everybody, we went into more depth on our last month's webinar, but we have a brand new website called BuyParkCityRealEstate.com. Open another window, type that in. It is a fantastic website. The search functions on this website is second to none. You can actually pull up a property and pull up maps, just like you're standing in front of the property. Get all the views.
You'll feel like you're right there. You'll feel like you're right there, and multiple views, both from street level and bird's eye view also. And not only that, if you already know Park City or you want to learn individual neighborhoods, we've broken that down to make it very easy for either a new or an experienced user to experience these individual neighborhoods and developments in Park City. We think it's the best online website for Park City real estate that's available to anybody else.
Yeah, so check that out. So our final topic, we're gonna do about 12 years in review of Park City real estate with different graphs and statistics to show, you know, where our boom, where our bust was in the last 10 to 12 years here.
Yeah, not only that, it's going to presage or indicate where we think this market is going, and we're very excited about sharing this information with you. So please stay with us here.
All right, just a couple more minutes. So this first graph, this is not all about Park City. This is actually counties all around Utah. We want to take a bigger sampling size so we can get a real feel for what's happening across the state. And as you can see here, percent increase, and I believe this is the first quarter, the first of the 2012 comparing to 2013. You can see the active listings are down 31%, 39% in Salt Lake County. Weaver and Davis County, it's down 142%
really good
in 1 year.
Really good.
And then you can see down here, let me just grab this arrow. Right here, under contracts in Salt Lake County are up 11%. We're up 16% in closed price in Salt Lake County. We're seeing really good indicators of what is going on in the market.
Utah is such a great place for a second home, a primary home, or investment property. In the downturn through the dog days of 2008, 2009, Utah was one of the few states where there was actually economic development improving. And that's continuing right now. We're leading the country or at the top of all those charts for economic indicators. We're so excited about Utah.
Yeah. So this next graph is a snapshot of the active and pending listings, and this goes back to September 2006. In the blue is the total active listings. The green is the total pending listings. So you can see these lines were very close back in 2006. And as the market started to decline, more listings were coming on the market, but less properties were going under contract and therefore selling. So we had a decrease there. You can see that total active listings have been declining since 2008 and now is at the lowest point, actually lower than we were in 2006. So this is a clear indicator. Our inventory is so low right now and there's so much competition for properties. So the next thing is appreciation.
We're very excited, and we hope that we can share this information with you. And let's talk about some more confirming trends.
Yeah. So this is the Park City MLS. This is total units sold. You've probably seen graphs like this. We want to just point out 2009 was the clear bottom of the market, and we've had 3 solid years of increases in total units sold, starting with 2010 all the way up to 2012. How 2013 has been shaken up in just this first quarter, I would be shocked if we didn't beat 2012
And
numbers.
get your ruler out too, and you'll see that basically we're able to take people back to 5, maybe 10 years back and be able to make purchases right now. As you can see, Jeremy here is showing us around 2001, 2002, and now we're here in 2012. This is great for people that want to invest right now.
Yeah, that missed the mark, and we're actually going to take you back 10 years.
For sellers, this is absolutely great because it means that if you price your property correctly, you're going to get activity and you're going to get sold, and we can show you how to do that.
But again, if you overprice your property, it's not going to sell. So this graph, this is the total dollar volume, and we've got a 6-month rolling average in blue, and we got a 12-month rolling average in red. Again, you can see the spike in dollar volume in 2005 at the height, and then we dropped all the way down in 2009, and we've steadily been climbing out, and you can see at the last bit of the graph, we're seeing a pretty sharp increase in dollar volume sold.
Yeah, this is another indicator that tells us that our market is heating up, and it's a great time to be an investor here in Park City or a seller because you now can actually sell your property.
Yep. This graph is for Summit County, so this is the notice of defaults going back to the first quarter of 2007. We want to show you, my arrow worked, it's not working. Anyways, first quarter 2007, this is where we started seeing the first notice of defaults and foreclosure sales. You can see the third and fourth quarter of 2009.
The dark days.
The dark days.
dark days throughout the country.
So what we want to show is, the steady increase up to 2009. From 2009 on, we've started tapering off and into 2012. We only have second quarter of 2012, but we know as of now, our active distressed property listings are below 6%, so that's short sales and foreclosures combined.
If you're competing in this market right now, you're going to be in a multiple offer situation on bank repossessions. Oftentimes in these markets, as we transition, we can show you other properties that perhaps are not trust deed or foreclosure sales that actually make more sense because the competition is so fierce now on those bank repossessions.
Now, I love this graph. Some might have seen this in the past. This is the total units listed, which is in the blue, versus the total units sold, which is in the red, over the past 12 months. And this brings us all the way back to December of 2000. In 2005, we were selling almost everything that was listed.
Look at how that chart compresses, Jeremy, right there. Just compresses right there at 2005.
And then we can see that up through 2006, all the way up to the end of 2008, total listed was very high, and we are not selling those listings, and they completely dropped out. Again, we can see another indicator. 2009 was the bottom of our marketplace, and the great part we can see is that from 2009 up to 2012, we're getting a decrease in total units listed, and we're getting an increase in total units sold, which is compressing the graph, and we're getting back to what we saw in 2004 and 2005.
These lines are converging, an extremely healthy indicator.
Yeah, that's great. Now this graph is a percent of units listed, which actually sold for the past 12 months. So again, we're going back to 2000. You can see in 2005, we were selling nearly 80% of all properties listed. That is very healthy. In 2009, 20% of the properties that were listed.
It absolutely flipped, 80% to 20%.
And that was not fun. But as you see from 2009 all the way up to where we stand now, big increase in the total or the percentage of units listed that are actually selling. We're sitting 55%. We're probably getting closer to 60% now.
It means there's fierce battles on well-priced properties, whether you're a buyer or a seller.
Yeah.
This is really a great transition market for both buyers and sellers right now.
And then here we've got the Park CMS. This is median price for single-family homes, and this is all areas. But again, you can see 2000. The numbers itself might not be important, but you can see the trends. That in 2009 we were at the bottom, and we have been climbing steadily out all the way up to 2012. We look back to prices. I mean, we're going back, mid 2005 prices.
8 years.
But still,
this is really good.
Yeah, still significantly lower than 2006, 2007. Love this graph. This is absorption rate.
And we're finishing on this one too, I believe, right?
Yeah.
Great.
So this is the months of supply. So how absorption rate works is that if not another single property came on the market, how many months would it take to sell out of every single property we have? So so the higher the number, the slower the market.
The worse it is.
Yeah. If we look back to 2006 September, we were sitting about 10 months of supply, and as the market got worse, we had more property listed and they weren't selling. We got up to,
look at that,
40 months of supply.
Yeah, my God, 3 years of supply, and we were out there beating the bushes.
Yeah, and again, that's right when I got in the real estate business. That's fantastic.
Good time.
Yep, and you can see again from 2009, we dropped off our absorption rate has steadily decreased. It's decreased. And now we're sitting at about 12.5 months, and that was December. So we're probably close to September of 2006. I'll repeat that, close to September of 2006 in terms of the absorption rate and what has been selling. So for those of you thinking the real estate market is still dragging, it's absolutely false.
But there's a kicker in here too I'd like to talk about.
Sure.
Okay, so whether you're a buyer or a seller, make a copy of this and put it up on your refrigerator. It's really good news. The second thing is that we are at 2012 with better interest rates than we had back in 06.
Mm-hmm.
And if you look back at our last seminar where we talked about how you can actually finance and save money right now, this is an incredible time because you can get really, really low rate financing that we don't think is going to last forever. So why not take advantage of it right now?
Mm-hmm. Yeah, no. So it's great on both sides because lenders are lending more money so the sellers can sell and buyers.
This is a great chart. This is the one chart that really explains everything right here.
So that was the end of our presentation. Hope everybody enjoyed it. Now this is your chance to ask us any questions you have. Simply type your questions in the Q&A box below, and we'll do our best to answer them. And as you were thinking about some questions, we want to remind you can always go back and watch past Park City Market Talk webinars. They're available at thewilsteinteam.com/webinars.php or on our brand new site, which this will redirect to, viewparkcityrealestate.com. We try to make it very simple for everybody. Also, our newest Park City Link newsletter is here. This is our February edition. If you did not get one in the mail, and you want one, which you do, it's great information, go ahead and shoot us an email and we'll send one out to you right away. And if you are thinking about selling your property and you'd like to receive our Smart Seller magazine, again, you can type in the chat Q&A box or send us an email to request that, and we'll ship that right off to you.
And that talks about the force multiplier.
Yeah.
Which is the system that we think will get your property sold in the shortest amount of time for the most amount of money if you're a seller.
All right, so we got a question that came in. Which area and type of properties are the best deal these days? Which area and type of properties? Well, if you're a straight investor and you're looking for a property, I would say the least expensive single-family home in the Park City area you can get, because that's the first segment that's going to increase. So, we used to have properties under 400,000. Now there's maybe less than 5 in our whole MLS. And now we're moving up to very, very small inventory of homes under 500,000. For an investor side of it, you can purchase these properties, and the rental market is so strong here in Park City.
It's extremely strong. In fact, it's even taken me by surprise, and I've been spending a lot of time on the Park Record. My Saturday nights are, since I'm old, the old guy, I sit around and watch old movies and go through the classifieds in the Park Record. Believe me, rents have strengthened up even beyond my expectations. Mm-hmm. It's a great, great time to use low-rate financing for investor properties and to maximize rents. I can't ever remember when the ratio was so strong towards rental properties. Yeah. And I would agree with you. If you have the money and you're buying single-family residences right now, the bottom end of the market is putting in a base that we talked about earlier in our stats, and you can go back and look at those. And then what about townhomes and condos? Where do you think the good buys there are? I mentioned already to start it off, I mentioned you want to go back and take a good hard look at the Canyons properties on old inventory that's there that could use a little rehab.
Yeah.
The rents are extremely strong for nightly rentals and or for yearly rentals. And Talisker is bringing big muscle into that market. And that would be a nice place to start. How about some other areas you can think of?
I think the Old Town area of Park City. It's
on the bus routes and so on.
Yeah, it's close to Park City Mountain Resort and Deer Valley, and it's right close to Main Street. So that's always a pretty hot area because there's only so much inventory. So, you know, I'd look at the Old Town area
and Park Avenue areas and so on. We've seen a lot of activity there too.
One last question: which price range is the hottest? Well, that's a great question. This will depend on what inventory. If you're single-family homes under 500,000 are selling like that. Even though I feel like some of them shouldn't sell, they're selling because there's nothing left.
Katie's Crossing just didn't even make it half a day.
Yeah,
you know, when pending in the 550 range.
And then also probably the $1 million to $1.2 million range, just slightly above $1 million. People are getting into because these properties again were selling much higher in the past. So it really depends. So if you want to boil down on what kind of property you're looking for, we can get more specific on price range.
And the other thing that let me speak a few things about this too, to this issue. Single-family houses are going to point to what's going to happen with townhomes and condos. And I did the same thing in 2004 myself, where I was buying single-family houses in the first half of the year, and I moved over to townhomes and condos in the second half of the year. And so that's always a good way to do it.
Okay. Let's see. Any more questions, and we'll wrap it up. If you don't have any questions, you know our contact information, 435-487-0151, or toll free. Again, Ron, Jeremy, or Ed at the Wilstein team will all answer you.
We're more than happy to have you write us messages, emails, anytime, day or night, and we'll try to get back to you within 24 hours. And so if you want to just send us emails because you thought of something, you have a question, we'll be more than happy to send you additional information as you request.
All right, so our next webinar will be Tuesday, April 9th, 2013 at 7 p.m. Mountain Time. We hope everybody joins us again. And so from here in Park City, I'm Jeremy, the young guy.
And I'm Ed Knapp, the old guy.
And we're waving you off. Have a good night.
Good night, everybody.